You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. And today, before I begin, I just want to remind you, there's a website associated with this podcast called wealthformula.com. Lots of resources there. Check it out. Things to sign up for, things to download, all that kind of stuff. If you've never been there, you should check it out at least once, wealthformula.com. As far as today goes, I want to talk a little bit about this concept of know, like, and trust, which I think is, I've talked about it before, and I've always made this idea, if you who do you invest with? You invest with people you know, like, and trust. The thing about it is what I've realized over the years is it's really just not enough, right, to know, like, and trust. I mean, I've been at this alternative investment game since I finished surgical residency in 2009. And luckily, since then, my wins have been significantly outnumbered by my losses. And I've made a lot more money than I ever did as a physician, or I would have if I'd continued practicing. But, it wasn't always smooth sailing. And I started out with, my own apartment buildings. And, the first one was a big flop. And, that was a big lesson, and everything's a big lesson. But when I started investing as a limited partner, what I realized was that the lessons that I learned from that, in the apartment buildings that I was buying for myself was different than it was investing as a limited partner. So when I started investing as a limited partner, I was given some reasonable advice. And again, that advice was invest with those who you know, like, and trust. And that's not terrible advice. But what I've realized over the years, again, is that it's incomplete. There's a lot more to investing than to know, like, and trust the operator. For example, you may know, like, and trust your brother-in-law or your cousin or whatever, who's just starting out in real estate syndication, who's going to make it big. And he seems like, he's a smart guy, right? But that doesn't mean he knows how to operate a multi-million-dollar asset, right? He may give it his best shot, but that doesn't make him competent and certainly does not put your investment in good hands. So, know, like, and trust is incomplete. Know, like, and trust is useful, however, to the extent that you can have some confidence, hopefully, that somebody is not trying to rob you on purpose. And after that, really it comes down to doing your own research on the operators and the business plan and all that kind of thing. Ronald Reagan used to say, trust, but verify. And you can trust the operator, but you still need to verify their competence and the likelihood of the success. And that means asking a lot of questions, looking at the qualifications of the team to carry out the business plan, and also to be very cognizant of any track record that the operator has, or conversely, if there's no track record to be had. So if you do all of these things, you'll minimize your risk of disappointment. And I say minimize because there's no guarantees in the world of investing. There just isn't. If there were, everybody'd be constantly getting rich and that's it. But in competent hands, what I can say is that real estate will provide a profitable outcome more often than not. And that's really all it takes. So what is an alternative investor to do? I mean, the task of vetting where you deploy your assets may seem critical, which it is, but that also seems kind of daunting, right? So what are your options? Well, you could just give up and say, I'm not doing this. I'm just going to go into Vanguard ETFs, right? That's what, a lot of the other communities talk about. They sing the praises of these ETFs. And if you do that, and listen, by the way, I'm not against ETFs. That's not what I'm saying. I don't do that stuff, but I certainly am not against it. If you do that, you might be able to preserve your wealth. But the thing about what the space that we're in is it's a space that can make you wealthy. And that is a very big difference. So ETFs are never going to make you wealthy. They may preserve your wealth, may help you keep up with inflation, but they're not going to make you rich. So what else can you do to maximize your chances of success when it comes to alternatives? Well, again, I've said this before, and I'll say it again. There is great power in collective intelligence, especially if people bring different skill sets to the table. And at the very least, creating such tribe of like-minded individuals will help to pool the right questions to ask about any opportunity or to bring up any concern. So how do you put together a tribe? I mean, it's easier said than done. I mean, most of us in the alternative space really live on an island. And that's why, our group like Wealth Formula Network that we have is really useful because, you can't necessarily talk about your friends and family about alternative investing. They may not be into this stuff. Chances are they aren't. If they are, you're all set. Otherwise, you may need to go to, say, I don't know, some in-person meetings like some of the Wealth Formula events and network with others of like mind and talk about potentially, creating those kinds of tribes. The concept of tribe is really important in alternative investing. And my guest on this week's Wealth Formula podcast, he's been on a few times. He's created a business to help various tribes deploy their capital in an efficient, smart way, I think. So anyway, make sure to listen to this show. Some of these tools could really pay off for you. And we will have this interview for you right after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula podcast, well, he's been on before. His name is Travis Smith, and he started a really interesting business called TribeVest. He was the founder and CEO of TribeVest, and he was on the show. Gosh, this was like ages ago because it's like if you mark COVID as a period in time, sort of like BC, right? So this is like before COVID, right? BC. And Travis, welcome back to the program.
Thank you. Great to be here, Buck. Always look forward to this. Believe it or not, I was probably pre-COVID, and then I did come in during COVID. And so this is my third.
Oh, it is?
Third time. So does that put me in rare company or not?
Yeah, it's pretty rare. Pretty rare.
Okay. All right.
I think George Newberry's been on like 7 times. Robert Kiyosaki's been on 3 times. So that's pretty good company. Yeah.
I'll take that. Anytime I'm on the same list as him, I'm
good.
There
you go. So what's going on? Tell me what's going on with, so first of all, we have new listeners every month. So I think it's a good idea to back up and kind of explain what TribeVest is, what was the idea behind it, the inspiration and all that.
Absolutely. I can even look at my different times where I was a guest on this show and think about it in stages almost. But, if you go back to 2019, we had built out the banking and collaborative infrastructure for the private investing world. And we marketed it very broadly. And you could come onto our platform and file your LLC in any of the 50 states. You could configure your operating agreement in minutes. You opened up an FDIC insured business bank account. Everybody signs and ratifies the operating agreement. Everybody lands on, so this is for group investing. We've made group investing safe, easy, and transparent. All the members of the partnership land on on a dashboard, full transparency. Everybody can see the banking activity, all the documents, the records, you name it. That's all the transparency. And
but just to back up though, the big picture is, okay, you've got these assets that might have a and for our group, of course, it's accredited investors, but sometimes there are people who do sophisticated, no matter if you're all that kind of stuff. You have an offering, typically in a private offering, the minimums are not, a couple $1,000s. They're probably, at least 25 grand. And most of the time, 50, 100 grand. The concept here that I recall, which I think is a really useful one, is for people who don't want to, you may not have that much to invest in a given year. You may have only a couple $100,000. And if you're in stuff that with minimum investments of 100,000, well, that only gives you an opportunity to invest in 2 things in the whole year. And so what you're doing is you're creating teams and you're saying, okay, we can come in at a minimum together. So instead of that $50,000 minimum, we may have, five guys or gals who come in, and they each put in, $10,000 into that deal. So their money goes a longer way in terms of diversification of investments. Did I kind of summarize that reasonably well?
Yeah, absolutely. Again, like going back to the very beginning, we marketed our platform very broadly, and we still do. And what was cool about that is people were coming onto the platform, forming partnerships, pulling their tribes, and doing all sorts of things: active investing, flipping houses, short-term rentals, long-term rentals, getting into art, collectibles, you name it. And then, really in 2021, it became so clear that limited partners, passive investing into real estate syndication was a real sweet spot for TribeVest.
Sure.
And how you broke it down was exactly right. A lot of these thresholds to get in, the minimum thresholds 25. That's the lowest. More and more, we're seeing 50. We're seeing 100K, 250K, and so it becomes smart. And you think about it, it's not just because I can't write that check. It's because I want to get into more deals.
Right. I
want to diversify. I want to get into a new sponsor I maybe haven't worked with before. I want to get into a new asset class. So no, I don't care who you are, kind of writing that 50K check into a new whatever, it's hard. So these groups and our technology made that so easy, easy. And that's what we've done. We made doing business with partners so easy. Yeah. It feels like a transaction.
We certainly have, within our investor group, again, it's a accredited investor group, but we have people who've kind of gotten together and who are, investing as various tribes. And one thing I noticed too on that is that, like, if there's something that seems especially interesting to somebody, they may double down. They may say, okay, I know my tribe is going to invest in this, but I want a little bit more exposure. And so they'll do it. So it has a lot of versatility to it, right? There's just, and I guess the thing is organized in such a way, presumably, where you're voting what you're going to, what you're going to invest in. It also creates an opportunity for, people to come together and discuss these investments. Have you found that to be the feedback on that to be good?
Yes, absolutely. It's not just about pulling capital. And there's a number of reasons why our tribes are small. They're not more than 15 people, because you are operating as a business partnership. So, manageable number of partners, but there really is that human element to this. It's not just about stacking capital, which is important, but it's about leveraging each other's network. It's about finding confidence in each other. It's about leveraging each other's expertise. This is an area where I'm especially knowledgeable, or I have experience. So that ability to be a mastermind, to pull that collective know-how, that group think, so powerful. And what you see more people investing in more deals with more efficiency. I mean, as you know, a lot of accredited investors, there's a lot of them. Most of them, I say, like 90% of them have never invested in a private deal. Why is that? And it's because they don't understand it. They don't have that access. They don't have that network. It's unfamiliar to them. So they keep going back to the stock market, and we know how that goes. We know how that story ends. So these tribes are pulling in a lot of new accredited investors into the market. And as you know, Buck, when people go to your conferences and they learn things. Things are unlocked, right? And then they go back home, and we all feel this obligation to share this good news and new way of thinking with people.
Yeah.
And what a better way to do that than with a tribe.
So one of the challenges I think people in this arena, this alternative asset arena, have is that it's a very lonely world, and in the sense that, like, you could try to convert your neighbors and your family, whatever, but people have very personal views on personal finance, and a lot of times, the brainwashing is so pronounced. The conventional wisdom of Wall Street and all that, it's very tough to break through. So all that is to say, sometimes it's difficult to find colleagues who might want to form tribes together. So do you have any solutions for that?
Yes. So, and you're friends with my friend Jim Pfeiffer, who introduced me to you originally, and is head of the left field investors community, and together we've coined kind of what we call is community personal finance. Mm-hmm. And to understand community personal finance, you need to understand conventional personal finance, right? That's, maybe what we learn in school or what we learn from our parents. Very much comes from a place of scarcity. It's not a bad thing, but, spend less than you make and save more than, don't outlive your savings, right? Make sure you die before you run out of money. And it's a very mature market too. There's a ton of technology. There's 6,000 financial advisors out there. You're talking to an ex-financial advisor here. So it's just what you're used to. And then when you go into alternative investing, and it kind of drives me nuts, they call it alternative investing, but the alternative investing is real assets, real things,
sure,
like where you live, where you eat, where you shop, all those things. But to get into those, you need to be able to invest in the private assets as private investments. And again, just the way things have been regulated and everything else, those are hard to find. In fact, they're so hard to find, they're not allowed to be marketed.
Yeah.
You have to find somebody to introduce you to them. And so you were just touching on it, just, how hard it is. Once you kind of get over the threshold, it's not that hard, but it's so hard to get into alternative.
I guess the question
investing.
I have is, okay, you've got these tribes, right? And the alternative asset investors are on an island, right? We have Wealth Formula Network within our group, which is a way for people to talk about personal finance who are of like mind in the alternative asset space. And that's very useful, because I think one thing that we can say in our group generally is that, there's not a lot of people that we necessarily are friends with and stuff like that who would do this with us, right? So the question I have for you is, say you want to do this. Sounds really interesting, Travis. Sign me up, but I don't have any friends to do this with. So have you guys found a way to match people who don't know each other and maybe give them an opportunity to meet and find out if they have a similar interest, that kind of thing?
Yeah, great question. So there's a number of ways we're doing this. First, we've been really careful and intentional to be a neutral third party. Mm-hmm. So you're never going to find us, you're not going to find a deal on our platform. We're not going to be making any recommendations.
Sure.
So we really are a utility, a platform that's very useful out in the market. And
by the way, I just want to point out that is extremely important, because I think the problem with where you're standing is the potential for abuse is huge, right? Of directing people to various investments because maybe there's commissions involved or something else like that. And I like the fact that you're so neutral. But I do think that there's also, I wonder if there's ways to, have gatherings and stuff like that or whatever to, introduce people, just let them meet each other,
Absolutely. And that is happening. And again, in true nature of kind of our position of not being influential and keeping that neutral status. We're seeing it happen on the platform and off the platform in these communities like yours. I mean, look, you may or might not know this, but last time we were on here, we gave, I think, a $50 a discount to any listeners that wanted to start a tribe. And over the last 18 months, there was over 70 tribes that came in and exercised that discount. And we had to stop it.
Just from Wealth Formula?
We had to stop it.
That
was specific to Wealth Formula that we offered your audience. So, we're learning that.
Why did you have to stop it? Because of 50 because of the $50?
You know, we were just trying to figure out, was it being, were other people kind of finding it and sharing it and everything else. And we wanted to, if we were going to offer it, we wanted it to be specific. But nonetheless, a pretty big number of your community has met in fact, Jim came to your conference, met Ryan Steig. I don't know if you know Ryan Steig.
Well, Jim and Ryan were part of my community before they started their community. Absolutely. And I think they met through us.
They did. And they formed a tribe. And they formed a tribe after your conference.
Right.
But well before they started their community.
Yeah.
So anyway, I'm just calling out that we're finding more and more ways to integrate with these communities. So I'll tell you how open tribes come in. So there's kind of two new developments in terms of services that TribeVest is again, it's not a new product. It's just another layer of service because we understand the market a little better. And one of them is these communities, when a community is group thinking a deal or, vetting a deal together or being pitched a deal, well, the community can actually open up a tribe. And you think of it as a little bit of a soft commit process, right? So, the minimum to get in is $50K. Let's open up an open tribe where the minimum is, say, $15K or $10K. And now you can join that tribe as a member, as an active member of that tribe. The operating agreement is all about pulling the collective capital, which is your ownership in that business partnership tribe. And you've all agreed to, in fact, you're going to vote on it. We're going to vote on deploying it to this deal that we're all excited to get into, but at the amount we want.
Right. So let me ask you this, because if you're talking about like larger tribes, like a community-based tribes or something like that, and a group like mine, if it did it, probably like end up being like $100 million, and these. But the point, the question I have for you though is that that starts getting into like SEC questions if you're having huge groups and huge amounts of money. And what is your take? I know you're a former, Wall Street type money manager and are probably, pretty good at following these directions. But like, is there at what point does this potentially become an SEC regulated type activity that needs to be filed and that kind of thing?
Yeah, I mean, so we've gotten really simple and clear on this. For example, even though it's a bigger community, right? The tribe itself is only going to have 15 members or less.
Okay, got it. So right? Is that the rule in general? Is there something about that 15?
The key here is that each member of the tribe is a active owner, an active member in there. So, you have to kind of think, well, at what point is this model being stretched too far? And, we don't even want to come close to that. We just want to say, hey, the origins of TribeVest is about how to leverage your network and to do more things with people like and trust. Right. And you can do that with 15 people. And then And then you could form, there could be another tribe. There could be another tribe.
Yeah.
There could be another tribe,
Sure,
but each unit is certainly, so we're certainly, and look, the market in those communities appreciate those best practices and those guardrails to how do you do this. So that's, the question was, hey, how are you helping people that don't have a tribe do this? Well, we're working with these communities, and the communities can kind of say, hey, let's open up an open tribe. And if someone wants to participate in this deal, we can do it at a lower amount. So that's another one. Yeah. And then the other way we're doing it, Buck, which I'm really excited about, we're just learning a ton about, but we saw that limited partners coming together to hit the minimums or just to invest together into these deals was a great fit for TribeVest. And now we're seeing some of those same people that are really good at finding and qualifying deals. Like they put a lot of time into this. They've built relationships with the sponsors. And then they've uncovered or have negotiated new tiers of investing, right? So if I write a $50K check, I'm in at this level, or finding out that there is a different tier where you get different terms or a different class of share. Yeah. And that comes when you say, hey, what if we wrote a single check for $1 million? What if we wrote a single check for $5 million? And that's super exciting because there's a lot of these people out there. There's a lot of those people out there. And you think what we do for them, Buck, is all the back off. Nothing we do is sexy either. I think that's the other thing that we've gotten real comfortable with.
Didn't you guys do a credit card or something like that?
No credit card. Your bank does have a debit card if you want it, but it's nothing sexy. It's we help you form a business in the right way. We file that with the Secretary of State. We open up your business bank account. We make it really easy to do capital contribution onto our platform. We help you wrangle those cats, right? And put those capital in. And then you can wire one check to the sponsor, and the sponsor loves it, right? Yeah. Because it's one investor, one distribution quarter, or whatever it is, one K1, and then we take that distribution, all the back end. We do the distributions to all the members based on their ownership percentage of the business. We take that one K1 and we do all the K1s for each of those members. So we're doing all that back office, heavy lifting stuff that all of a sudden people are like, wait, if I didn't have to worry about all that and how I was going to do it, we can do a lot of these. And that's what happened was people were doing like 1, 2, 3, 4, 5. And then when it came time to do quarterly distributions, they were like, oh, this is a lot of work. I can't do more than 5 tribes. Or, when K1s come in, I can't do more than five tribes. Now, with open tribes and for this specific application, investing into a single deal, into a real estate syndication, we'll do those quarterly as an admin. We'll do quarterly distributions per your operating agreement and our service level agreement. When a K1 comes in, we'll take care of that for you and process your K1 and distribute it to all your members. So you can see how now I can go from 5, where that was manageable, to 10 to 15 of these. And people are building a business around this. This is a service that they're offering.
So when you get a K1, are you sending out basically combined K1s? How does that work? I'm a little confused because you've got like a company, and that company is getting a bunch of K1s, and then so are you combining those essentially because they're part of the company's revenue, and then distributing one single K1 to each investor from that tribe? Is that essentially it, or?
That's right.
Well,
That's
helpful.
right. Well, and just to simplify it a little bit, in this instance, we are talking about a tribe that is doing one deal in this case. So one tribe doing one deal,
case.
and that's how we can wrap these services around it in a really,
understood.
We can do it. But you think about that one K1 coming in, absolutely, that is revenue into the business, right? The distributions, and then that K1 shows that revenue, and then the business partnership, the tribe that's on our platform, that's theirs, they own it. We'll do that service for them. So we'll take that K1 with our CPA. We, of course, in there is everybody's ownership percentage. And from that, we distribute those K1s. Got it. And as you know, those are little things that people don't think about, but when you're doing them, you're like, oh, this is work.
So what, obviously, so what are the costs involved to people want to participate?
So our platform is still there for anybody to use, right? And it's $348 a year just for the subscription. And that's it. That comes,
anything else?
That's it.
Okay.
Well, okay. So we'll add on. So in an ad hoc way, you're doing it yourself, the $348, right? And that includes the dashboard, includes your onboarding, helps you configure, the rules. The bank account is open, interest-bearing bank account, FDIC insured, your cap table to be configured, your document management, all that, $348 a year. So what are the additional costs? Well, you still need to file an LLC. So that's $99 if you're in Ohio, say. If you want to use a registered agent, we're $150 a year, and we'll be your registered agent for you. If you want to do automatic report filing with the state, so some states require a state filing fee. Sure. We can do that for you in an automated way for another $150 a year. And then taxes. So K1, we're really excited. We just launched our K1 services. Before this, you had to kind of go off our platform and use your own CPA. And now we've partnered with a CPA firm. And what's cool is we're leveraging all the.
We just split it out.
Yeah, and it's just so we've made that real turnkey. Cool. So those are kind of like doing it on your own. Great way to do it. And now with these open tribes, we can offer all these services and turnkey this for $150 for the first year per member, and then $100 per member every year after that. And that includes
that's everything. The K1. Okay, yeah. All right, got it.
Yeah, all the way to dissolution. Like we'll even once the deal's exited, we'll dissolve it and everything else.
Well, okay. This is interesting stuff, Travis. Where can people learn more?
They can learn more at TribeVest.com. You can go to TribeVest.com/open tribes to kind of learn more about that, especially if you're interested in being a champion, as we call it. They're champions that are, looking to leverage the power of their network to get into bigger deals. So that would be a great one. And then Buck, we'll have to reactivate. So maybe on the show notes here, we'll reactivate your landing page.
I mean, I've never heard somebody turning off a promotion because it was too successful. Travis, we need to have a talk about this. That's not really great business practice. I mean,
you've got a good point.
Yeah.
My CFO is like, what is this promo code everybody's using?
There you go. And, so basically you screwed me. No, just kidding. Anyway.
Right.
All right. Well, listen, what is that? What is it? It's going to be reactivated here. What's the code?
It's called $1.50.
$1.50. I love it. Kind of like 50 cent, right? Like, but $1.50. $1.50.
That's right. Honestly, I think you originally came up with it because you like the sound of it.
I do. See, I've forgotten everything, Travis. I've kind of done too many shows, I think. All right. Well, great. And again, what was the site? Say it again for us.
TribeVest.com.
Okay.
And again, on with the special landing page for you guys, let's put it in the show notes.
Yeah. Sure. Absolutely. $1.50. All right, Travis, thanks for coming on. And I'm sure we'll have you again before we have Robert Kiyosaki on so that you can take a lead there.
Oh man, what a thrill that would be.
All right. Okay. Take care. We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. Tribe, that's where it's at, right? And, collective intelligence is really key, I think, to success in these kinds of things. Now, obviously, collective intelligence can backfire on you, too, if everybody is of like mind. So it's sometimes important to have some different personalities in a group, too. Some who are more critical and some who are, less critical, and, some who are more analytical and some who are more emotionally intelligent. I mean, and that sounds ludicrous, but this is actually a tremendously important skill set. I can tell you that from my personal experience in investing, that emotional intelligence has probably been one of the main reasons for predominantly successful track record that I personally had with my investing. So anyway, hope you enjoyed the show. This is Buck Joffrey with Wealth Formula Podcast, signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.